For taking us through that. But if you've been looking to invest in the real estate, but you don't have the mega bucks to buy property, there is some good news. Market regulator Sebi has tweaked the norms for companies to raise funds via the real estate investment trust and infrastructure investment trust called REITs and InvITs. So the floodgates have truly been thrown open for REITs. That's the question we're asking. Prashant Nair is here to tell us just that. Prashant, how big are these changes?
The big impediment why we haven't seen any REIT deals or structures in place is because of the fear of cash leakage. I'll explain that. Sebi regulations earlier essentially said that a REIT must own the physical asset directly. It must house the physical asset directly. Let's assume for a minute that we're talking about a building. The problem was that if an SPV, a special purpose vehicle, owned the building in question, the building was housed in the SPV, to take the building out of that special purpose vehicle and for that to be put into the REIT involved cost. Stamp duty, for example, as high as 6 to 8% in many states. And there are other costs as well. So that caused fears of cash leakage, that not being the most efficient way for investors. And that was a fear as well. Sebi has now essentially said the shareholding of the SPV can be just transferred to the REIT. And of course, the asset transfer happens automatically. No costs involved, no stamp duty and other things. So I think with this one single move, Sebi has taken away the most important, significant impediment to why we've not seen these kind of structures. The other, of course, is the number of sponsors. Usually, commercial property has 2, 3, maybe 4 sponsors, partners, whatever you want to call it. But there might be cases, and there are cases where different legal entities of the same organization own interest in the same asset. That complicates things when you have when the limit set at 3. With Sebi saying, well, there are no limits on the number of sponsors for these structures, I think Sebi has cleared the way for this to be done in a more efficient and faster way. But I think I go back to the first point. The basic issue was the cash leakage, fears of that being taken away by these new rules. Back to you.
All right. Thanks so much, Prashant.